In this special episode, we're going to look into the commercial real estate sector of the economy. There are always opportunities inside every single financial market, no matter what, recession, peak, trough, it doesn't matter. There are always opportunities. We're going today to look specifically at real estate, which is literally a $20 trillion market. There's so many things that you need to know about commercial real estate. Even if you're not investing or trading in that area, it's really important to understand it. And that's exactly what I focus on, you understanding what's going on. By the end of this video, you will know what the top 5% know. Hi everybody, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back KS family. Let's run the numbers. One thing that I find particularly interesting is sector rotation. According to the Global Industry Classification Standard, there are 11 sectors and one of them is real estate. You might have seen recently that JP Morgan beat expectations. The bank posted a record profit of $12.6 billion. JP Morgan Chase CFO or Chief Financial Officer Jeremy Barnum said that JP Morgan's risk with commercial real estate are minimal with less than 10% exposure. This itself bears further examination. Why did he feel the requirement to talk about commercial real estate? That should already throw something on your radar. That's why we need to dive into what is being said here, what's being said without being said. In 2008, the GFC was caused by toxic mortgage lending. There is a widespread belief that the next crash will be caused by mortgage-backed securities but related to commercial real estate. With the collapse of Silicon Valley Bank, regional banks were hit hard, and they have 30% of the commercial real estate lending market. To understand what's happening with commercial real estate, CRE, you need to understand net operating income or NOI and also the cap rate. The cap rate is if you were to buy a building for 100% cash, what rate of return would you require? You can figure out that if things were really risky, the cap rate would be higher. If it's almost a sure thing, the cap rate would be lower. What you can see here, if net operating income was $50,000 and the cap rate was 8%, the value of that building would be $625,000. Why do you need to understand this formula? I'll show you. We've been seeing a reduction in the amount of office space that is occupied. Class A buildings have had a higher occupancy than Class BC buildings. The amount of occupied office space is coming down. That decline is more accentuated in Class BC buildings, which are lower quality buildings with less amenities. Even more concerning is the vacancy rate. The vacancy rate, what we saw inside the GFC crisis, it was nearly 14%. Look at it now, it's far, far in excess of that. This means that commercial real estate is getting far, far riskier. Why is commercial real estate getting riskier? Because there's less tenants to occupy that real estate. Many businesses, when they borrow, they actually project the income that they'll get to secure those loans. The rental return becomes very, very important. What happens if the net operating income suddenly decreases? Say it went from $50,000 to $25,000. Of course, the cap rate will not stay the same because your net operating income is just not coming in. If you're going to buy the same building that you bought for $625,000, you won't be getting a cap rate of 8%. That could potentially double to 16%. What would happen under this condition? Remember, we're only looking at one building here. You've got to think that this is playing out across hundreds of thousands of buildings globally. If net operating income drops by 50% to $25,000 and the cap rate goes from 8% to 16% to return the increased risk of that particular investment, what happens to the value of the building? It actually drops to $138,889. This is simply an example, an illustration to show you the relationship between net operating income and the cap rate. If we look at the difference between the initial $625,000 and what happens after the cap rate doubles and the net operating income halves, you can see it's literally an 80% reduction or loss in terms of value. And this is what the banks are having to face with commercial real estate. As the meditative mind said, it's like a ticking time bomb again, Ken. Vacancy rates are visible in the CBD and surrounding suburbs in Melbourne. Office and retail for lease signs are everywhere. Thank you, my friend. It's so very, very true. Have you noticed this in your hometown? Please let me know in the comments. This is a global phenomenon. We can also see that when the pandemic was actually declared, the office occupancy rates by metropolitan area in the US, they just haven't recovered. The risk of commercial mortgage-backed securities, CMBS, is so stark. You can see it just increasing literally exponentially. This is the market, the financial market, saying that commercial real estate is becoming increasingly risky. And as the percentage of US banks tighten their lending standards, this actually increases the risk even further. Why is that? Because the owners of commercial real estate can't refinance. Around $2.6 trillion in commercial mortgages are set to mature between 2023 and 2027. The problem is that many of these loans are held by smaller banks. Why is that a problem? If you're a bank and you actually gained a loan value at $625,000 and now it's worth $138,000, what are you going to do? And go the opposite way. If you're the owner of real estate and it was worth $625,000 but it's only worth under $140,000 now, what are you going to do? This is why there will be increasing defaults. The people who took out those loans won't have enough money to pay for them. There are things called real estate investment trusts or REITs, and they are companies that own or finance income-producing real estate across a range of property sectors. They are traded on most major stock exchanges. If you're investing in REITs, you need to be aware of what's happening in the commercial real estate market and also the public real estate market as well, the non-commercial real estate market. REITs make up about 10% of the commercial real estate market. As banks tighten their lending standards, the risk of defaults on commercial real estate is ever present, is ever growing. And also, it's a little bit deeper than that. If you are a commercial real estate holder and you can't get tenants, you may actually convert your CRE into just normal real estate, convert it into apartments. Governments always need to focus on economic stability. If there could be a collapse in the commercial real estate market, of course the governments would green light the conversion of commercial real estate into just normal real estate, apartments for example. One thing to understand about sector rotation: real estate becomes very, very negative on contraction of economic cycles when the economy enters into a recession. But please note, there are always opportunities. Consumer staples, healthcare, utilities, they're the go-to places when the market starts to melt. When the pandemic hit, people literally fled the cities and they stayed at home. And they ended up working from home, despite a lot of organizations trying to entice people to come back to offices. That trend hasn't reversed, and we can see this in pending home sales. Pending home sales in the US decreased 21.1% year on year in February of 2023, following a 24.1% fall in January and marking the 21st straight month of declines. Statisticians and economists also look at housing inventory. This is literally like inventory in a shop. It's inventory available for sale, and you can see that inventory has been falling, which puts upward price pressure on the housing market. and this has created a lot of unaffordability all around the world. We can also see that existing home sales have been coming down for quite some period of time. Recently, a 12-month slide in existing home sales was snapped, with the largest monthly percentage increase since July 2020 of 14.5%. When we look at pending home sales, because they just absolutely fell like a brick, getting these kind of bounces is on the cards. Increased interest rates and demand destruction are weighing on single-family home prices. And we can see that they were coming up until just recently, and they've started to fall down. When commercial real estate gets repurposed to residential buildings, what is going to happen? Please let me know your thoughts in the comments. It's really important to do this active learning, to think deeply about a specific area. The markets are fueled by earnings growth rates, and we can see for Q1 2023 real estate negative 8.4%. We can also see consumer discretionary is an absolute standout, followed by industrials and energy, with financials coming in fourth place. Materials, healthcare, technology, and communication services, they're all looking fairly sick. I would suggest that you keep your eye on the real estate sector, and we can see it's under negative price momentum at the current time. Lumber can also be really good to keep your eye on. We can see that's under a lot of negative price momentum at the current time as well. I would also suggest you keep your eyes on consumer staples, healthcare, and utilities. It's important not to get caught up in any particular story. Sector rotation is not a law. It's just a bit of helpful guidance, but it's something to keep in mind. You can see by real estate is undergoing some stress. Real estate analytics firm Green Street recently estimated that the US property values are down 15% since March of 2022, as rising interest rates have hit the entire commercial real estate sector very hard. You're going to hear more and more about the commercial real estate sector just in the mainstream media news. Just keep this little equation in mind. Just think about what rents are they receiving and what is the risk of that investment. That will help you to understand where CRE or commercial real estate is heading. Hopefully at this stage, what Jeremy Barnum said, the CFO of JP Morgan, will make a lot more sense now. You'll get a very good gut feeling as to what is happening in the CRE market, how it's impacting the REITs and just normal residential properties. In 2008, toxic mortgage-backed securities caused the global financial crisis, and it was all because banks hid the ball under the cup. They hid the toxicity of those loans. What happens when the commercial real estate undergoes the same exact problems? One thing to remember, things take time to play out on an economy-wide scale. Please let me know in the comments, how do you think the commercial real estate market, its unhealthiness, so to speak, at this potential point of time is going to impact the economic system? It's very important to do your active learning. You'd be surprised when you actually answer something like this in a comment. It makes you think very, very deeply about it. If you would like to share your expertise on this particular sector, please also feel free to reach out in the comments. I would also suggest, as the different banks start to report, keep an eye on what they're talking about CRE, commercial real estate. It's more important than a lot of people realize. And if you're investing in the REITs, it's very good to be aware of this information. Have a fantastic day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. And well done to everybody with that positive, excellent spirit. You're just awesome. Bye for now.